Hey guys, welcome back to Practical Liberty. My name's Henry Bingaman. This is part 2 of my episode with John Foster. In part 1, he talked about Austrian economics and his Middle School MBA program. In part 2, we're going to get more into angel investing, which is something I've been really passionate about the past few years, and John has a lot of experience in. So I hope you enjoy this episode. So I want to transition a little bit to the investing side of this because, you've had a successful career and you do a lot of angel investing now, which angel investing is just investing in private companies before they go public or get acquired. So how much of this economics do you think kind of helps you out? Your understanding, it's because you understand when you're teaching it to 10-year-olds and 11-year-olds, you're understanding it on a very fundamental level because you have to be able to communicate it. So what is the real world application of this knowledge throughout your career, I guess?
I would say there's two things that are quite important there. And so last year, I actually we debuted this model at Freedom Fest last year, and a professor out in California asked me to come talk to his MBA class. It was a class on corporate strategy, and what I told those guys was, I said, if you have the Keynesian macroeconomic view of the economy, then you see the rest of the economy as big blobs, right? Big aggregates. You've got aggregate prices and you've got aggregate GDP, but you can't discern the details within that. You see your own business as a micro entity that has prices and profits and that sort of thing. But when you get to the border of your business, to the macro world, you don't have a vision of what's happening there. If you look at the linking model, if you happen to be standing, say, in this business right here, you look over to this business and you say, oh, I see what their inputs are. I see what capital they have. I can see there's enough granularity to recognize what's happening with all around you in the economy. It's not just a bunch of aggregates. And that gives you an advantage over people who have a very fuzzy notion of what else is going on around them. So in my career, I actually made very good use of this in corporate strategy and business management. And what was the other part of your question?
I was asking more, just what are the real world applications of kind of the Austrian school? Because I mean, we
Oh,
have.
yeah. And in angel investing, there's I think this more complete view of understanding that there are a lot of other players there, that they're competitors, and that there's this evolution over time of all these different pieces, sort of the really dynamic nature of it all. I think it's a very good perspective to come from. And of course, it tends to be a pretty, I hate to use their terminology, but micro focused thing. You're examining this one business and trying to guess if it's going to get traction going forward. So it's angel investing is always an amazing crapshoot, right? These are the people who are willing to go out and invest in companies that may not even have revenues yet, that are the craziest, most untested ideas really in the market. So nobody has a perfect record there. I'm sure there are plenty of war stories to go around of all the companies that have blown up and all the crazy things that come out of left field and
Yeah.
cause failures.
Yep. I once invested in it was a home growing cannabis company, although we advertised it as tomatoes because your laws vary from state to state. But so it was this home grow box. It had all the bells and whistles, controlled it from your phone. These two, I forget, they were South American founders living in America. But they contracted to an Amish factory to build these boxes with their technology, and the factory burnt down. And then the Amish tried to sue them, claiming they owed the technology. And these two entrepreneurs, I don't know, they disappeared. They're back in South America, but they never formally dissolved the company. So I don't even know where that thing stands. I can't write it off on as a loss yet because technically it still exists. But yeah, there's some weird things that happen when you're investing in these private companies.
Yeah, that's for sure. We had one recently that went off the rail. I mean, you a lot of founders are not your normal everyday people. They're just not, and so you expect a few quirks, and but you know that comes along with being extraordinarily motivated, extraordinarily
Mhm.
smart, um, and crazy creative, right? So those are the people you work with. But we had one that's recently blown up, and you know the founder has just totally gone off the rails, drug problems,
Oh no.
and you know people look at it in hindsight and say, didn't you guys know that he was crazy? And I'm like, well, yeah, we knew, but we at the time we thought it was a feature, not a bug. You know,
Right.
there's a limit to how much craziness a company can survive.
It's funny because a lot of it is that craziness, that drive is what gets them off the ground in the first place. And then you get to a point where that crazy needs to be replaced. So Uber did that recently. They had a founder that was just so driven. Travis, what was his name? I forget his name, but he grew that company to the $1 billion valuation. And then when they got to the stage where they needed to stability, they booted him because he had to go. So there's different stages in that company life that needs different leadership at different times. And, you know, crazy is helpful sometimes at the beginning.
Yeah, you know, that's just part of the specialization process, right? I keep being amazed at how much specialization exists. You know, it's things get finer and finer and finer. And so at the early stages of a company, you need somebody with skills A, B, C, D. But then as you get further down, you need D, E, F, and G. And you know, just it's not in that same box. That guy doesn't have those. And so the you know these people that found companies and sell them and then do it again and do it again, they're using their skill set in the spot where it's most useful.
Mm-hmm.
And as opposed to being, oh, what a shame the founder, you know, doesn't have his company anymore. We should all be happy about that. You know, oh, yay, the market has made things even better for us by putting a person who's more um I don't want to use the word fit, or who is a better fit for that role than the one that's in it. And sometimes that transition is not as pretty as you'd like. You know, the founder doesn't always recognize that when it's time for them to go, and somebody has to kind of push them out. But overall, it's a beautiful process that lets everybody play where they play the best.
So as far as the investing front, you know, angel investing or private investing used to be, or investing in America was always just open. And then FDR during the Great Depression came in and put in all these regulations because there were a couple scam artists out there raising money for fake companies, and he used it as a way to control the economy more. So he really shut down investing until I think it was Obama actually opened it up with the Jobs Act back in 2010 or something like that, where
Yeah, yeah.
Regulation D companies you became able to invest. And then that opened up even more recently with the crowdfunding companies, which has actually brought in a new wave of like fly by night people that are out there on the crowdfunding sites trying to raise capital for an idea that's never going to take off. So I guess what's your kind of take on the current market of angel investing? Because a lot of capital is dried up with the current economic uncertainty. So, you know, for a couple years in there, everybody could raise $1 million, and it seemed like overnight. And now it's companies are being, or investors are being much choosier. So I guess just what's your current take on the state of the of private investing, angel investing?
Yeah, no, I agree with you. Things have tightened up, but and I think, you know, what, 5 years ago when you could get basically zero interest on cash, then people were reaching for yield everywhere, doing more risky stuff in the stock market, et cetera. and that pushed more money into the angel space. And now that you can get 4 to 5% on cash, then there's a lot less incentive. So the manipulation of interest rates it reaches everywhere into every savings and investment decision is touched by interest rates. And that I think that has slowed things down quite a bit. And probably, when rates were really low, there was probably too much money going that direction. And like you said, anybody could raise $1 million to do anything. And so we had a lot of misallocation of capital there. Now some of that's getting corrected. But you mentioned FDR regulated these markets because you had fraud out there, you had Ponzi schemes. But the fraud hasn't disappeared, right?
Yeah, just look at FTX right now, a pyramid scheme out there in plain sight.
FTX right now, or Bernie Madoff,
Right.
a few years back, they actually had several people contacted the FTC and said, "Look, this Madoff guy is a fraud." And okay, so FDR's agencies failed to discover that, even when somebody brought it to them on a silver platter. So they didn't drive out fraud. What they did was made people more complacent. Prior to the regulations, people would recognize that it's a tough, hostile world out there, and you got to watch your P's and Q's. You have to be careful. So really, I think that's been a totally counterproductive effort. One of the nice things about Austrian economics is that Austrians try to see the world as it really is. They don't see the players as angels or some idealized public servants. They see human beings with all of their frailties and faults, and markets as the best way to muddle our way through the world that we live in, a world of scarcity and imperfect people and natural disasters and everything that happens in the real world. This is the best way we found to deal with all that.
Yeah, it's a description of reality is how I always describe Austrian economics versus the models that they come up with in these other economic theories, the Keynesians and the modern monetary theory. They're making predictions and they're trying to force fit the world into what they want reality to be, but it doesn't work. You have to function within. That's what's great about Austrian economics is it's just a description of how reality works. It's not trying to force anything. It's not trying to change the world. It's just giving you the rules that are out there to be played by.
That's exactly right. Exactly right. And I think, to your earlier question, when you see the world, the way it really is, with flaws and everything else included, then you have a better opportunity to pick your way through it and try to reach your goals with the means that you're employing.
So do you have any tips for people that want to kind of get into angel investing, have been thinking about this, looking at this space? I guess, what are the places that you'd recommend they kind of start joining?
Don't do it.
Don't do it. Get out, run away.
It's a tough world. It's a tough world. Okay, let me give you the my take on angel investing is it's super risky. That's the first thing you got to know. If only half of your investments go to zero, you've had a great day at the office.
Yeah.
So downside, if you're thinking that you're going to just make a pile of money, think again. It's a very tough world. But the upside is, wow, the people that you find there are amazing. They are the entrepreneurs are very cool people, super smart, very motivated, lots of fun. The other investors are great people. The connections that you make are terrific, and it's exciting as hell to see the new things that are going on in the world. We have one company that Axosim. Uh, they make a nerve on a chip. This is
Oh,
a lot of people can grow a nerve cell, but these guys can also put a myelin sheath around it. So then they can take this nerve cell and attach electrodes to the end and pass a current down it. And so it's they can see it function as a nerve, and then they can take it and set it in a solution of whatever drug you want to experiment with, and they can see how they interact. So you can jump ahead of animal testing, et cetera, et cetera. And these guys are trying to cure things like ALS, which is incredibly exciting. And
mhm.
the benefits to humanity are just over the top.
Yeah.
So you get to play in that space with these people that are doing these just amazing things. And that by itself is just so worth it.
Yeah,
So that's
the connections I made doing some private investing has been awesome. So, for example, you introduced me to a guy that former Marine who's looking to get into the cannabis industry, and I was able to connect him with the CEO of a major cannabis company just to have a discussion to see because he's not exactly sure he wants to do some vets mental health stuff with it, but it's cool to be able to just make that connection. And that's now two people that I've connected that, and I've done this a dozen times over the course. You just get to know some very, very fascinating people at very high levels who also have deep Rolodexes. So getting into the world, it's fun on its own, even if I lose the money on some of these, most of my investments. And I do expect to lose about half the investments I made. Although I've only lost one so far, which is kind of amazing out of 7 companies over 5 years. Which is it's a light. I haven't done a ton of it, and I vet the crap out of them because I'm terrified of losing giant chunks of money.
You should be terrified. Yeah, yeah, we should all be terrified.
Yeah, I get so excited when I get a new pitch for a company that sounds good. I look for reasons to not invest because that's just my personality is I'm excited, I want to be all in, and I have to go do my due diligence and find ways that I think they could fail. And then have that discussion with them. And usually if the founder or CEO can come up with like, well, here's how we're going to overcome that, or here's our plan for that. That's when I take the gamble and go in.
Yeah, yeah, yeah. I have this bad habit of falling in love with almost every entrepreneur that pitches, they're because I mean these are their dreams and their life. And really what I tell people is when somebody invests with you, they're buying into your dreams and they're there to help you reach those dreams. On the kind of the mechanical side, one thing that I would advise people do is to invest as a group, as opposed to an individual. I've been in both situations, and when you have a group of people who are investing their pool of money together, you get the strength of a lot of different perspectives,
Mm-hmm.
and with people with just as much incentive as you have to come out with the right answer. I mean, you get great alignment and and a lot of brain power applied to the same place from different perspectives. So if somebody is, thinking about dipping a toe in that water, I would recommend, there are a lot of different ways to do it. There's Karatsu, that's a big group that shares diligence. Um, they're just it's sliced and diced, I don't know, many many different ways. um but the best, my favorite, the thing that I've seen that I find the most effective is a relatively small group of people who are investing a pool of money that they've all contributed to. That, to me, that seems to give you the best alignment and the best and, like, for instance, in the group that I'm in, one of the groups I'm in New Orleans, you need a super majority to make any, like 66% to take any action. And we've had a number of cases where most of the group wants to invest in some company, but you have one or two people that go, nah, I ain't doing it.
Mm-hmm.
and they stop us from making a mistake, and the dynamic in the group is terrific. Nobody goes, oh, you're going against the grain or whatever. We all respect each other's opinions, and it's like, okay, great, that's what you think. We didn't get the super majority. We're not investing in this one.
Yeah, I have a group of about 4 guys that we all do pretty much the same deals. It's not everybody invests individually, but pretty much when they come to us, they know, or they come to Jed or me, they know they're getting the whole group's attention anyway. And so you're not putting in, $100,000. You end up through the group putting in $250,000, which is a whole lot more attractive. But we also try to, except with 1 or 2 exceptions, invest in companies that we can help grow. Because, the group I'm with is all marketing online guys. So we're like, oh, we know how to get you attention for this product you're selling. We know how to market this. We can help you. You become an advisor to the company when you invest in them.
Mm-hmm.
So I want to be able to see the path that I could help them. If I can't see the path that I can help them at all, unless there's so the one I invested in is a defense contractor. And I don't have any way of helping them. They make, it's actually really cool that the guy was an Iraq vet and he got in a firefight out there, and he was going into the bush to fight the Taliban to rescue this group of Marines that had been pinned down, but they could hear gunshots. They couldn't tell which direction they were coming from. So he invented a grip for a gun that creates a real-time map of where all your guys' guns are pointed. So they're using it in some policing functions right now. The company's growing like crazy. So it's really exciting. I have nothing to offer them, but I got in on the friends and family round. So why not?
Yeah, every one of these companies has some story behind it like that. That's just interesting and compelling, and it's just a great space to play in.
Yeah, it's fun. All right, we've been going for about an hour. Anything else we want to talk about before we wrap this up?
I don't know. I think we've done pretty well, and I think the whole thing between Austrian economics and angel investing and how middle schoolers see the world through Austrian economics it all ties together nicely, and I think it's all about trying to apprehend the truth about the world around us and do something with it to make it a little better.
Absolutely. Dealing with reality makes your life easier, even when it makes it harder, and sometimes it makes it better in the long run. So
maybe sometime we should even do talk about that in psychological terms, because I think a lot of the mental illness and mental distress that people experience is rooted in misapprehending their reality and struggling to get, so all these things have a lot of connections. Maybe we should talk again sometime about that.
Yeah, that would be interesting. I think you're right. When your expectation of how reality should work doesn't match what's really happening, it's gonna cause some stress on you somehow. It has to.
Yes.
Yeah, that would be a really interesting conversation. So we'll have to get back for a round 2.
Sounds good.
All right, John Foster, middleschoolmba.com. And yeah, this has been a lot of fun. Thanks for coming on.
No, thank you, Henry. I enjoyed it.
All right, guys, that's it for this episode. Thank you so much for tuning in. If you want to get my free Levels of Liberty tactical checklist, just go to henrybing.co/liberty. This just kind of shows you where you are on the levels of liberty, where your freedom is right now, and gives you a checklist of how to move up the ranks. So that's henrybing.co/liberty. Get that free tactical checklist. All right, guys, see you next time.